I'm in my office on a Saturday for a quick closing this afternoon, and I had a little bit of extra time on my hands, so I thought I'd come to you and answer the question, what is earnest money? My name is Sharon Smoot. I am a real estate closing attorney and a realtor in the Metro Atlanta area. So let's get right into it. What is earnest money? Earnest money is a small deposit made by a buyer to a seller in a real estate transaction. And the purpose of the earnest money is really for the buyer to show good faith and that they're serious about purchasing the property. Now, way back when, earnest money might have been $500, but typically these days it is somewhere between 1% and 3%. And the earnest money is held in escrow. Usually it is held by the buyer's broker. There are instances when it may be held by the seller's broker, or it can be held by the closing attorney. It is becoming more and more common in the Metro Atlanta area for the closing attorney to hold the earnest money. And like I said, it is held in escrow. And when you get to the closing table, the earnest money is applied toward the purchase price of the home. So if you are purchasing a home, for instance, that is $300,000, that earnest money deposit is a credit to you and will bring down what you need to bring to closing by $5,000. A common question that many buyers have is what happens to my earnest money if I change my mind? And the answer to that question is it depends. What does it depend on? It depends on when you change your mind and what the circumstances are surrounding your change of mind. So let's talk about the first instance that would allow you to get your earnest money back if you changed your mind. So, the first thing is the due diligence period, and that is the period during which you have an opportunity to have the property inspected. The length of the due diligence period is something that you negotiate with the seller, as is the amount of earnest money, quite honestly. You might say that you want to pay 1% of the purchase price of the property in earnest money. The seller might say they want you to pay 2%, and you can go back and forth until you reach an agreement. But during the due diligence period, you have an opportunity to inspect the property, and you can terminate the contract at any time before expiration of the due diligence period and for any reason. You don't even have to give a reason as to why you want to terminate the contract, as long as you're doing so before the due diligence period expires. And once you provide notice that you are terminating the contract, there's a document that you're going to have to sign. It's called a unilateral notice termination and release, something like that. And you sign that. You check off the appropriate box that you're terminating during the due diligence period. You sign it and you transmit it over to the seller. The seller signs it. You will get your earnest money back. The next instance where you may be able to get your earnest money back, but it's not guaranteed that you will get it back, is during the appraisal contingency period. Now, if you are getting a conventional loan, your contract is going to specify the length of time of the appraisal contingency period in days. So it could be, for instance, 21 days. If the appraisal comes back low during that 21-day period, you can ask the seller to reduce the sales price. If the seller refuses, you have the option to bring the difference between the appraised value and the purchase price to closing in cash, or you can terminate the contract. And again, hear me, as long as the due diligence or as long as the appraisal contingency period has not expired. And one critical point that you need to remember is that this is for a conventional loan. If you are getting an FHA loan, a VA loan, or a USDA loan, The contract is going to specifically state that you can terminate the contract if the appraisal comes in low at any time and get your earnest money back. So that is a really important distinction to keep in mind. So the next circumstance under which you may be able to terminate the contract and get your earnest money back is during your financing contingency period. Now, the financing contingency period runs from the binding agreement date, as do all of these dates, these periods that we're discussing today. And your contract is going to have a document called a financing contingency exhibit. And in that document, it will set forth uh, your loan amount as a percentage of the purchase price, the interest rate, what the term, and whether the funding or financing is coming through a conventional lender, like an institutional lender, I guess is the best way to describe it, or another type of lending entity, for instance, maybe a hard money lender or a private lender. The financing contingency exhibit will also, well, it has a space for you to write in the name of your lender. You are not required to fill in that section. And the reason that that is an important piece of information to know is that if you fill in the name of a lender, your loan denial letter can only come from that lender. You're free to seek financing from anybody that you want to. But if you're trying to terminate the contract because your loan didn't get approved and you filled in the name of a lender in that section of the financing contingency exhibit, and the loan denial that you got was from a different lender, that loan denial letter will not get you your earnest money back if you terminate the agreement on the basis of a loan denial. So keep that in mind. If your financing contingency period, for instance, is 24 days and your loan gets denied and you get your loan denial letter, and just for purposes of this example, let's say that that section is left blank. You get the denial, and you have to provide that denial to, well, you have to give notice of the denial to the seller before expiration of the financing contingency period. You have several days after the expiration of the financing contingency period to provide documentation of the denial. So, assuming that you have done all of that in the timeframes outlined in the financing contingency exhibit, you will be able to get your earnest money back. If you do not do all of that before expiration of the financing contingency period, you will lose your earnest money. So as you can see, the well, let me address one more thing. If you're not terminating during the due diligence period, if your desire to terminate is not based on a low appraisal, and if it's not based on a loan denial, then you're basically SOL. If you are terminating just because you changed your mind, I did a video a day or two ago about a woman who realized that her monthly payment was going to be higher than she expected it to be. So she denied or terminated on that basis. If you are terminating for any reason other than those three that I specified, due diligence, appraisal, or financing, or another contingency that's contained in your contract, and that could be anything. Maybe the need to rent or sell another home. But whatever the case may be, if your termination is not based on one of the contingencies that I mentioned or a different contingency that is contained in your purchase and sale agreement, and you try to terminate the contract, you will lose your earnest money. So keep that in mind. And I'll give you an example. I was supposed to have another closing today, actually, two closings on a Saturday. And the buyers ended up having to terminate because the wife's mother had a stroke and she lives in New York. The wife was relocating here. The husband was already here or is already here. And the wife has had to put off making her permanent move to Atlanta because she's got to take care of her mom. And they're not sure, what's going to happen with the mom. And so they ended up terminating their contract and they were outside of all three of those periods: due diligence, appraisal, and financing. And there were no other contingencies in the contract, of course. So they ended up losing their earnest money. So this is not some theoretical kind of deal. This can really happen. So it's really, really important that when you put an offer on a house, that you are keeping track of all those dates and that you know that this is the house you want, because your reasons to be able to terminate and get your earnest money back are very limited.